All right, today is Friday, July 29th. Today is the last trading day of July of 2016. We're closing out the month today, and it's kind of been some interesting activity. So, Michael, just a few minutes ago, you were starting to share with me something about a trend. Tell me what's going on with the trend that you've seen.
Yeah, Mark, I'm looking here and I can see where this buy signal came in here at about 10:48 today.
This is on
And then
NDX.
on NDX, the 3-minute, 9-minute chart. And so you can see where we've had a really nice move to the upside. I mean, we really took off 47.35 all the way up to 47.43. So almost a 10-point move up in the NDX.
And just one thing, Michael, about that 47.43. That's a new
Yes.
that's a new 16-year high on
Oh,
NDX.
wow. Interesting. Wow. Hmm. Didn't realize that, to be honest. So anyway, I knew the S&P was, but anyway, so that signal came in around 10:48, and you can see here where it climbed. Then we had a sell signal, which is the red bar here with the red dot on it. It happened at 12:27. So that's about an hour and a half. In my experience and with the teachings I've had from Able Trend and my own experience, of course, the trend usually lasts an hour and a half to 2 hours, and you better start being careful with taking any more trades to the upside, like here on these sweet spot trades that we had, or the buy signal. Buy signal was valid, but the trade as you move up, you can take more positions and continue to make profits. But when you start getting that hour and a half phase, really to be very, very careful. Because it can, the buy signal, the sell signal is probably coming. Now it can bounce here and go higher. I'm not saying it won't, but it's already satisfied that movement. Now, if it starts a new trend, then hey, then it's the time starts over again. So if we get another buy signal to the upside, so
But you and I have talked about this trend, this cycle time is what I refer to it as. We've talked about it quite often, and it's pretty consistent. When you're looking at the signals on the intraday, the 3 9-minute charts, it's pretty consistent, isn't it? It's somewhere between an
yes,
hour and a half to maybe 2 hours. Sorry,
yes,
2.5 hours tops.
that's right. And it's like any other indicator, Mark. I mean, that's not in stone because sometimes you'll have a move, it lasts 2.5 hours, but still, overall, start being cautious around that 1.5 hour, 2 hour range.
hmm
I do, but
All right, so there are a couple of key things here, and we're going to see this on the bar charts too. But Michael's talking about the cycle time, which the longer the cycle time lasts, the greater likelihood is that we're going to see some sort of an intraday movement lower. You're getting a sell signal there on RUT.
yes.
Um, but the other thing is, and I already stated this, I just went back and confirmed the high that we hit today on NDX is a new 16-year high. The only other time that we've traded higher than that was back in 2000, March of 2000. So that's interesting. I mean, we're getting to some very lofty levels in the indexes. On SPX, might want to point out cycle time there, but I'll also just mention that we also hit a new all-time high on SPX today. So we're hitting highs. What was the cycle time on SPX?
Well, you just take a wild guess. What do you think it was? Without
Maybe
even
an hour
looking,
and a
you should.
half.
Exactly. It's about an hour and a half, hour and 40 minutes. And then the Russell started the same thing,
Mhm.
10:39 to 12:42. I mean, it's
Now the
good stuff.
sell signals started to come on. I actually saw a sell signal print on the 3 9 on Russell, but then it went away. It wasn't a sell signal that I would have wanted to take because we still had 9-minute support printing below us.
Yes,
That
that's right.
right there is, there are, it's like peeling back an onion. You want to peel back the first layer. The sell signal came on. The second layer is we're going to wait for the 9 minutes support to quit printing. And there are different layers of how aggressive or how conservative you choose to be on entering these trades. Um, just real quick on the 5 minute, 15 minute on all three indexes, we have sell signals on all three. But what I was just talking about, look at SPX as an example. We just confirmed that sell signal correct, Michael, on
Ye-
the 515? Because
yes,
we just printed, so confirmation is the sell signal comes on, that's the big red dot,
that's right there.
and confirmation is when the next bar prints. When that bar closes with a sell signal, the next bar prints and it's red.
That's
But,
right.
all right, so that's layer number 2. Layer number 3 is we still have support printing below us at 2170.
That's correct.
So that doesn't necessarily mean we wouldn't take a signal to go short there, because if the 3.9 is showing us a good opportunity, we might take it. But one of the ways to interpret that is to consider how great is the gap, is the distance between where we're currently trading and where that 15-minute support is printing. Because just because 15-minute support is printing doesn't mean we want to stay out of the trade. NDX is a good example of oftentimes there will be a signal come on, there's support still printing, there'll be a sell signal, support still printing, but we know that there's enough room, there's enough of a gap between the current price and that 15-minute support to actually take a nice profit. So those are, the different levels of things that you need to consider when you're taking a trade here.
And also, Mark, too, is, and I didn't do it because I was away just for a brief second, but if I would have saw that sell signal on the 3-minute chart on the NDX, even though we're on support, I look, we've been in this trend an hour and a half. Sometimes, if you've got a white screen, don't have a lot of positions out there, and you want to take, a little bit of a little bit more of a risk, and it is a risk. I mean, there's a risk, no doubt. I mean, because you're right up against support, but that worked out very nicely. Of course, I'm hindsight trading right now, but I've seen it happen more than once, and I've took that trade more than once to the downside, even if the trend has been in play for an hour and a half, even 2 hours. It wouldn't bother me to go short there because I know
All
what
right,
my risk was.
but let's take that as an example, Michael, because we frequently say you don't need to follow what we do. You
That's
need to
right.
follow what you're comfortable doing as a trader, and your comfort level is going to be defined based on the amount of capital that you're willing to put into a trade, the number of positions you may have open, the number of positions that you have that you're managing. Those are all factors. But what you just described is a situation where you recognize that the trend, the cycle time, is right at about our experience rate of when it's going to start to reverse. So the sell signal came on, you may choose to take that trade. Here's the thing. You should never take a trade without being able to explain why you took the trade. That's different than someone else agreeing or disagreeing with your trade. I don't really
Correct.
care whether anybody agrees with my trades. Michael doesn't care if I agree or disagree with his trades. We share what we're doing all the time, and we don't always agree, and that's fine. Um, but if you can clearly go back and say, "But this is why I took that trade. I took the trade because the cycle time was at an hour and a half. I took the trade because a sell signal came on in the 3.9 minute. I took the trade because when I look at where support is on the 515, there's enough room for me to gain a profit. I know it's a little more aggressive than waiting for it to confirm, but I'm going to go ahead and take that trade." If you know exactly why you took the trade and you feel confident in your ability to manage the trade if it moves against you, that's really the complete package. That's your ability to trade actively without worry, without the anxiety, without holding your breath each time you're taking a trade. Um, Michael and I have each traded for 30 years or so, and we've been through the early years of putting on a trade and holding our breath and hoping it was going to work out. That's not a fun way to trade. At least it wasn't for me, Michael.
Oh, no,
I'm
no.
pretty sure you would agree with that.
Yes, I would.
So these signals, understanding the signals, understanding some of the implications of the length of a cycle, understanding the implications of a slightly more aggressive trade versus conservative, those are the things that are going to give you peace of mind in trading. Those are the things that are going to allow you to take base hits and know that you can cover a trade and dramatically reduce your risk if it doesn't work in your favor. Can we jump to Amazon?
Sure. Let me refresh to make sure I got good data. Yes, there we go. Wow. Let's see.
Now the reason I wanted to show Amazon is I'm going to show this on my bar chart too, but just look all the way over at the 120 daily, all the way to the right. And you see what happened this morning at the open? Look at how high we were relative to the Bollinger Bands. And you'll see this even a little more clearly on my bar charts. But that right there, folks, is an excellent opportunity to get into a declining bias position. That right there, that's what we call a Bollinger Band snap pattern. That's an excellent opportunity to get into a declining bias. And Michael and I both did this morning right at the open, and we were out just a few minutes later. I didn't even track the length of time we were in that trade, Michael, but it was a matter
I
of
didn't know.
minutes.
Yes.
And we were out for about $4.50 of profit right out of the gate. I just traded one contract, so that's $450 at the beginning of the day. Now, the beauty of that is we have an overall objective in the live trading room account to average $400 a day. So we started off the day with $450. Anything else we do for the day is all upside or maybe some downside if we close something and take a loss. But it can be that easy when you're paying attention to what you're doing. You're paying attention to your trading business. We knew in pre-market, we knew 15 minutes before the market opened when Michael and I started to chat that Amazon was projected to open up, I think it was 17 points higher. And,
Yes.
and we were able to then see exactly where that was going to print relative to the Bollinger Bands. And so before the market ever opened, we knew that there was going to be a declining bias trade opportunity because frequently, without guarantee, or certainly not 100% of the time, when a stock or an index opens up big beyond the Bollinger Bands, although it may trend higher for the day, there is oftentimes a retracement, an immediate retracement of a portion of that move. And that's what we're trying to capture. And I wanted to emphasize that because that's the one exception for me personally where I am not using the Able Trend charts. Because you can see at the time that that occurred on the 120 daily, we were stacked to the upside. You can see on the other time periods, we were stacked to the upside. That would have said we should be going long here. But I'm taking a counter trend, contrary position simply based on the extreme move outside the Bollinger Bands. And we've done a few of those this week. And
Yeah, we have. And
they,
Mark, just for just for discussion, we got in at 9:31 and 27 seconds,
mhm,
and out at 9:35 and 6 seconds. So about 4 minutes, a little bit less than four.
that was a nice trade.
Yes, it was. I mean, yeah.
Well, in my case, and let's just talk about this, Michael. In my case, I told you what I was estimating the price of the option was going to be. So I picked a strike and I picked an expiration. And based on the delta of that strike at close yesterday, we estimated what the price of that option was going to be at open. And so I placed an order based on that. And I placed it prior to the market opening. So it was out there waiting for the market to open. Now, I assumed I was going to have to adjust my order because I calculated the delta impact on that option. And then I actually moved my price, I think it was $2 lower, just thinking, maybe I'd get a little bit of a better fill than just purely the delta calculation. As it turns out, I actually got a $2.50 favorable fill off of that price. So it was a great trade. Michael came in right behind me. He filled his almost exactly what I did. He actually got a favorable fill to my fill. And then we were both out for about a 450 profit. So that was a great trade. I like that. How about Priceline?
Okay. Let me refresh to make sure everything's good. There we go.
Now, Priceline is is very interesting to me because last night after the market closed, Priceline was showing in extended trading hours a decline of 3160. That's what I saw at one point. This morning, prior to market open, Priceline was showing a decline of, I think it was around 17 or so. And yet today has been a strong day to the upside. It's like it dropped right at open and then it bounced very strongly to the upside. I mean, Michael, on the 3090, if you could just highlight the first bar of the day right there.
Yeah, right there.
Yeah, look at the length of that bar. What was the bottom of that bar?
Yeah, 1313 to 1353.
Wow.
Yeah, 40
Now,
points.
I would have loved to have been in that, but I didn't see that. I didn't see a signal telling me that that's something I should get into, especially when in pre-market we were seeing that Priceline was actually down about 17 points in pre-market. So that'll happen sometimes. If you go back to the 3.9, it was all double stacked to the upside yesterday. So, if we had taken a long call yesterday at close or, sometime during the day and left it on overnight, it would have been a huge profit. But that's not the type of trading that we're trying to do here, folks. We're trying to trade. We don't want to win the game on home runs because they come so infrequently. We want to win the game on a whole series of base hits, recycling our capital, and protecting our capital overnight. And Priceline is a great example of that. You can see how much that stock can potentially move, and you don't want to be on the wrong side of that if, in fact, it is working against you. Okay. Anything else you want to add about the Able Trend charts, Michael, before we jump over to the bar charts?
No, I think you covered it pretty well, Mark. I do. Just trust what the signal tells you to do. And that's just trust it.
Okay.
And
if you can give me screen control.
There you go.
All right. There we go. You see my
We
screen
can see
okay?
We can see them fine.
All right, great. I'm going to start with Amazon. We talked about that just a minute ago, and I'm going to show you right here. We have a Bollinger Band Snap in play right now on Amazon. If anybody's interested, I'm not looking for a new trade right now. So that doesn't mean this trade isn't good. It's just I'm not looking to put capital in right now. I've got enough trades in play right now. But if you're looking for a trade, this pattern right here, especially when the Bollinger Band Snap pattern appears on a daily chart, 1 year daily, that, in my opinion, is a very strong pattern. It doesn't guarantee that it's going to follow through. Give yourself the benefit of education. You can do a little self-study here. Go back and look at the number of times that Bollinger Band Snap pattern has occurred, say in the last 2 years, and of those times, how many times has it then retraced back lower? It doesn't have to retrace lower immediately within the same day for it to be a good valid trade. Sometimes it's the next day, like in this case, but in this case, it moved outside the 3 standard deviation Bollinger Band. It continued to move lower. The next day, that might have put a little pressure, a little anxiety on a few traders, and then boom, it snaps back higher, and there you are, you have your profit. You can go back and do that analysis yourself. There are periods of time where it's outside the upper Bollinger Band, it continues to move higher, and then it moves back a little bit, but you wouldn't have had a profit there, but down here you would have had a profit. So they don't all play out immediately. You have to be patient. On stocks, you want to place your strikes well out of the money. I'm sorry, well out in time. You want to place them well out in time. The other one, before we get to the indexes, would be Priceline that we were just looking at. And you can see here, there's no Bollinger Band Snap on Priceline on the daily, but we are trading in a slightly declining pattern. Today, we moved up to the top of that pattern, moved right up to a level of resistance. And if I look at a 60-day, 60-minute, there is a Bollinger Band Snap. I have a declining bias price line trade in play today. I bought a long put. I did so on, I believe, the second bar of the day right here. We're trading above the 2 standard and right at the 3 standard deviation Bollinger Bands. Has not played out for me yet, but doesn't mean it won't. So we just have to be patient. And actually, I'm seeing a 5-minute sell signal printing right now on the AbleTrend price line chart. So we'll come back and look at that in a little bit. So let's jump to the indexes, because this exercise is all about searching for a market top. Now, I want to be really clear about this. We're not trying to call tops and bottoms on our trades, but I am seeking the next level of natural resistance that the market defines. That's not me defining it, that's the market. So far, we haven't found it yet. But what we do is we go through our work each day to measure where the index is trading, in this case NDX, where is the index trading relative to where we saw resistance yesterday, and also relative to history. Now you can see that we've moved today above where we had previously identified resistance. That's okay. It's not that big of a move. And what we're going to do here is we're going to move that. And oops, sorry, wrong one. I'm going to move that. And I'm just going to shift it up so it captures the very top of today's trading range. And then I confirm, I look back in history and confirm, am I still connected to prior levels of price activity where the market naturally defined resistance? I am. Am I still connected to a bottom where the market identified a natural level of support? I am. So to me, that's a valid adjustment. These exercises and these adjustments are not just about following the price. It's really about trying to find where is the market going to define its next level of resistance. And when it does, the price is going to start drifting away from that high. And that's important to me to understand, because then I know as the price starts to drift away, if we move higher, if we move back lower again, I can see the formation of the cycle, and I'm going to have a clean view of where my ultimate long-term support or long-term resistance is. So right now I see that resistance at about today's high, which would be 47.43. And we've been climbing quite a bit higher. The AbleTrend charts showed us that we were still double stacked to the upside on the longer term, 30.90 and the 61.80. But at some point that's going to weaken. Here's the thing: in our search for the top, the bar chart tells us that we're trading at an area of strong resistance. It hasn't told us yet that it's confirming this as a top. The AbleTrend long-term time periods are still telling us that we're stacked to the upside, which means we could continue to move higher. All of those things are technical views that help us determine whether we're there or whether we're still waiting for identification of that top. That's an important exercise in my mind, and frankly, the exercise takes you just a few minutes every day, and it's worth your time, if for no other reason than to simply be very intimately acquainted to your charts and be able to literally visualize exactly where the index is trading on a chart when you wake up in the morning and you first see a price. If you're like me, you wake up, you look at the futures, you know what the price is projected to open at, you can visualize exactly where that is on your chart relative to support and resistance. So that's NDX. Let me take a look at SPX. SPX is a little different animal in a good way. SPX is a little different. We were in a declining cycle up until today, and we moved back up above that cycle. But we are still at the same level of sideways resistance. I've not modified this channel today. And you can see now we've got 3, 6, 9. We've got about 9 days. Let me see here. 3, 6, 8, plus another 4. We've got 12 days that SPX has really been trading in a very clear sideways pattern, with the most recent 8 days all bumping right up against that sideways resistance. And I've showed this before, but it's important that you look at it every day and pay attention to it. But that sideways resistance that we've not been able to break above today with SPX is tied back to prior levels of resistance that the market defined. We've formed, as we said before, a new all-time high today. The new all-time high on SPX is 2177.09. So that speaks volumes in my mind in terms of a stalling pattern that we're starting to see. In this case, I just want to put on some other studies here and see if there's any other indications. We've got 3 breakout signals to the downside on the daily chart while we stall at a line of resistance. We have declining momentum as evidenced by our AO, and those two things, the breakout signals to the downside and the declining AO, those are indications of weakening structure in the price. We haven't seen the price actually give up yet, but when you have weak momentum and breakout signals aligned to the downside, those are clues that we may start seeing some weaker price activity. Again, no guarantee we could break through this resistance and continue higher, but that's why we go through this exercise, so that we know how strong that resistance is or how weak it is. And like I said at the beginning, this is all about searching for a market top, because when we see the turn, there are going to be some huge opportunities for us, I think, to the downside in terms of profit taking. It doesn't limit us from opening new positions and taking profits to the upside, which we will do on 3 and 9 minute Able trend charts. But this right here, like Michael said earlier, if you're in a cycle for an hour and a half on the short-term time periods, he's going to be cautious. This pattern right here is what gives me caution about taking a rising bias position on SPX. Doesn't mean I won't, but I'm going to make sure that that thing is doubly confirmed, and it's going to be an ultra conservative entry because of this pattern that I see. All right, let me get rid of those other studies and let's jump over and take a look at RUT. RUT is the other index we trade, and it's very similar to SPX and NDX. We've been climbing a little higher. 2 days ago, we hit a high and stalled out at 1222. Today, we have a high that's a little bit higher at 1224. As we progress towards close today, folks, watch these trading prices on all 3 indexes. All 3 indexes formed a high today relative to yesterday. And if, in fact, the indexes close in the bottom 50% of today's range, that will be what we call a bearish divergent bar. It's just one other data point. It's just one other piece of information to pay attention to. If we happened to form a bearish divergence on one or all 3 indexes, then it's just one more card in the stack that says we might be reaching a point of weakness, because the message there is the market was strong enough to get to a new high, but it wasn't strong enough to maintain it. So pay attention to that. That's good exercise for each of you in the live trading room to look at your own bar charts and measure whether or not there's a bearish divergent bar today. You just need the price to be in the bottom 50% of today's range. I have not made any adjustments to the channel on RUT today. And you can see that we moved right up to that level of resistance, sideways resistance, that ties back to 2 prior natural market tops. So my interpretation of all this is, if we are not at a top now, and we've not gotten any confirmation that we are from either AbleTrend or bar charts, but if we're not at a top now, we're getting very close. The cycle time is extended. The length of time that we've been in this rising cycle from a macro view is getting quite long. The number of price points, especially on SPX, that have been bumping right into a long-term level of resistance, that's an indication. And then the other studies, as I showed you on SPX, RUT is not the same story just yet. We're still showing increasing momentum on RUT. So it's a different picture than what we saw on SPX. But those are the signals and the indicators that we pay attention to. So macro view, my summary of this is, Michael, you please weigh in if you see something different or want to add anything. My macro view is we're close to, if we're not already at, a top, but AbleTrend is still saying that there might be some strength to the upside. So we need to pay close attention to these measurements on a daily basis. And in the meantime, continue to watch the 3-9 and 5-15 charts for trades, both rising bias trades and declining bias trades. A word of caution: if you take a rising bias trade, make sure you go out of the money to buy that long call so that you can prepare yourself to cover that trade if it moves against you by creating a credit spread, a call credit spread. That would be the approach that I would take, but I would only take that trade to the upside if it was fully confirmed and a conservative entry. Anything else, Michael, that you want to add?
No, I agree with most everything you said. I looked at my bar chart, and especially on the NDX. I was going to share that with you a bit ago. On the daily NDX, the AO is higher than the previous AO. So what that basically says is we're in an overextended move up, because the price has gotten higher, so has the AO, and it's went higher than the previous high that was back on April the 19th. We sort of peaked right there, then it pulled back, and it tried to go higher again. It didn't. Then it started this next wave up, and so it's already went through that. But now it's extended, so you can see. I see on your bar chart there. You can see like maybe around the 19th of April, that there was a high there, and then the AO would sort of peaked there, and now the price has gone higher, and the AO's peaked higher than the previous AO. So that's overextended, basically move up, basically is what it's saying. So I think any week, I think we'll see some kind of sell off. Now it won't be big. It might not be huge. It could be. I don't know that, but and we can, there again, we can still continue to climb higher because the AO is overextended. So.
But one of the good things is we don't need to know how big the move is going to be.
No.
We don't really even need to know when it's going to start. It for me is more an exercise in being intimately familiar with the charts, but we don't need to know when it's going to start, because we always are going to revert back to the 3-9 and 5-15 signals. And we're going to take short signals, we're going to take long signals. And what I've tried to emphasize here is whether I want to be aggressive or more conservative is going to be based on what I see on my macro view on the bar charts. It doesn't keep me out of a trade. It doesn't prompt me to get into a trade. The 3-9 is what's going to tell me when to get in. And so if we do start to weaken and we see the markets moving lower, we're going to have sell signals on the 3-9 and the 5-15, and we're going to follow those sell signals to the extent that we want to put capital in and open a trade, and we'll benefit from that. And
yes,
if some people believe that the markets go down faster than they go up, take the stairs up and the elevator down. I think that there sometimes is some truth to that. And so as we start to cycle lower, there may be some great opportunities for a higher than average profit per position. We do very well, and we're pretty consistent in terms of closing out of our positions for just somewhere between a $2 to $4 profit. Um,
Yes.
but on NDX in particular, and you know this, Michael, because you trade it so much, you trade NDX so much, you can get into that position. And in the time you're thinking about placing the closing order, that the mark on that, the price on that option can jump dramatically.
Yes, it can. Yes.
It's happened to us both quite a bit. And it's
Yes.
happened to both of us when we're actually trying to get into a trade. We've
That's
decided to
right.
get into the trade, and all of a sudden it just runs away from me, and I miss the opportunity. But
That's right.
um, it'll almost always come back to you and give you that opportunity again. So we're here in the live trading room. As I said, today is the last day of trading for July. We're closing out the month. We appreciate all of you being in the live trading room with us. We love having you here. We love you sharing your stories, your humor with us, your wins, your challenges that we can help you with. We just love having you as part of our trading community. We're here to help people learn how to trade. We offer our Profit Accelerator education course, which really teaches the fundamental basics of what we do in the live trading room. And then the live trading room is paired with the Profit Accelerator strictly for the purpose of being able to reinforce throughout every market day exactly what you've learned in the uh, webinar program, the Profit Accelerator. If you can learn, it's like reading a book and then having somebody show you exactly what to do and how to do what you just learned. If you can learn from the program and then you can implement that learning in the live trading room with some support and a deeper dive understanding that Michael provides, that I provide, that Allison provides, and Aaron, that, in my opinion, is the absolute best way for you to learn how to think like a trader and learn how to actually trade. My opinion is the vast majority of people who trade options are not actually traders. They're gamblers. They are speculating. They don't really understand what they're doing. They're holding their breath. They hope this works out. You know, their dentist told them they ought to buy this. Their neighbor told them they ought to sell that. And they don't really have any, they don't have a concrete approach to learning, and they're not treating their trading as though it is their business that they're dependent on for their livelihood. If you shift your mental attitude and you adjust to looking at this as a business, recognizing that it is an income that you can either nurture and grow, or you can throw away the capital that you have invested. I think most of you would prefer to nurture and grow rather than throw it away. But the only way you're going to do that successfully, consistently, is to immerse yourself in learning. And it's not difficult to learn, in my opinion. There are a lot of different components, but if you repeat them over and over again on a daily basis, you've immersed yourself into the process. It's like learning to speak a foreign language, and you go to a country that speaks that language and you immerse yourself in the culture. The learning is going to come much more rapidly than it will if you just listen to tapes or you just read a book. The same thing holds true with options trading. Immerse yourself in the learning. Make a commitment to learn, make a commitment to your business, and there's absolutely no reason that you cannot be a successful options trader. And who knows? Maybe one day Fox Business or CNBC will call you and want to interview you as a subject matter expert on options trading. And it will all be because you've been a self-declared expert because you did what most people don't do. You spent the time to learn. You invested the time to make mistakes, to follow through on them, and you built your trading business, which, in my opinion, is one of the best businesses you can have for financial freedom, lifestyle freedom, and just complete flexibility with where you are and how you choose to spend your day. So, again, thanks for being here, everyone. And we look forward to being back in the room again next week.